Is Bitcoin heading to over $1 million? Most recently, I have seen and been made aware of a few videos out there that are indicating that Bitcoin is in some kind of impulsive Elliott wave, 5-wave structure to the upside. And in this video today, I'm going to be breaking down Elliott wave theory in those 5-wave structures and basically showing you whether or not Bitcoin is or is not in a 5-wave impulsive breakout to the upside. Let's roll that intro and get right down into it. Okay guys, so for this analysis today, we're going to be sat here on the weekly time frame. We're using Bitstamp as our data source, so we have data that goes all the way back to kind of over here, this being 2011, so August 2011, right? So we've got data that goes back quite a way. Now, for the analysis here, before we kind of take a look at the price action of what is going on with the candlesticks for Bitcoin, I think it's important that we also reflect on the Elliott wave theory, okay? And so what I'm going to do is I'm just going to get some empty space just over here to kind of explain what a 5-wave impulsive move is and what the requirements are. Okay, so some of you will be already very familiar with this. 5 waves essentially will look like this. Okay, and having 5 waves on a chart like this, anyone can draw them, and you can draw them anywhere, right? So if we bring this back, we can quite easily go, look, we've got a 5-wave pattern going on right here, and we're looking really, really tidy, right? It doesn't quite work as simple as that. It's not just about identifying the patterns. There are actually very specific rules associated with wave 1, wave 2, wave 3, wave 4, and wave 5. They each have their own set of requirements. It can be a little bit much if you're new to the space, but if you can actually, apply the rules and understand the rules and don't forget any, then you end up in a really strong position. Okay, Elliott wave theory isn't hard to understand, but it is very hard to implement. Okay, so let's walk through what we would expect to see. Okay, so wave 1 and wave 5 can have slightly different patterns, but they should contain 5 waves. Okay, you can have something that is another 5-wave impulsive breakout like that. Okay, it's just a standard 5-wave move. You can have, of course, something that is diagonal in a way that it's natured, which is a wave 4 overlapping with a wave 1 and a wave 5 that kind of looks like this. Okay, with this, you'd still have a very big wave 3. Then you can have something called a contracting diagonal, which would look like this. Okay, higher highs and higher lows, and basically your wave 5 should be the shortest wave and wave 1 would be your longest wave. Then you have the opposite, which is an expanding diagonal, okay, which then looks like this. Again, overlaps with wave 1 and 4, and wave 5 being the largest wave 3 being the smallest wave wave 3 cannot be the shortest, and those other things, right? So there's lots of different kind of structures that you might find inside wave 1, and the same for wave 5. Waves 2 and waves 4 would only ever be 3-wave corrections. Okay, they cannot be 5 waves in themselves. So we can note that we'd have a 3-wave correction in there, okay, like so. And it has to be 3 waves. It's not a hard and fast rule, but I don't think for any most part you would expect to see anything other than 3-wave movements in there. And then wave 3 can only be impulsive, okay? And what we mean by that is it has to be another 5-wave movement, like what we have currently drawn on the chart. So you'd have another 5-wave move inside it, right? And so what we call this, without kind of drawing it on there, is you say that's 5 waves, this is 3 waves, this is 5 waves, this is 3 waves, and that is 5 waves. In other words, essentially, this is a 5, 3, 5, 3, 5, right? And it's an impulsive movement in Elliott wave theory. If you have a 5-wave structure like this, a 5, 3, 5, 3, 5, then it is a trend to the upside in this particular case, but they can go into downside as well because they go in both directions. You may call it inverted if you want to, it doesn't really matter. So for the most part, that's a 5-wave movement, right? So really important that we understand that. Then, of course, there are Fibonacci retracement numbers that are very important, right? For a wave 3 to be considered wave 3, it must pass 1.618 times wave 1. Okay, to do this, you don't just put the Fibonacci chart on wave 1 here, you actually grab the Fibonacci chart and you move it over to the bottom of the wave 2. This is now basically representing the wave 1 being the 1-to-1, and then 1.618 being 618 times that of the wave 1 movement. So you can see here in this particular example as drawn, the wave 3 does in fact exceed the 1.618 Fibonacci level, right? Okay, so that's a rule that is really important within this 5-wave movement. It has to be 1.618 times or higher. There's lots of different new aged Elliott wave theory out there that is not as per the 1930s Elliott wave theory structures, and they basically dictate that you could have different Fibonacci levels equaling different levels of probability hitting impulsive breakouts. Ultimately, that's not how Elliott wave theory was written in the 1930s. Very important that we actually, if we're going to talk about Elliott wave theory, talk about it as it actually is designed, and as it was noted by Mr. Elliott. So very important that we get that right. And if we are to kind of try to use some new aged Elliott wave theory, it's probably not a good idea to call it Elliott wave theory, but call it something different. With that being said, there's also Fibonacci retracements that you would expect to see when it comes to your wave 2. Your wave 2 typically goes between 50% and 88.2%. Okay, so normally there's a pretty decent correction for a wave 2. It's pretty deep. It retraces almost the entire amount of your wave 1. Okay, then of course your wave 4 also retraces a section of your wave 3. So for example, if I take from the top of wave 3 to here, you would see that this would normally typically retrace. I should do it the other way around to make it more sense. We're retracing down, so we would draw the fib from the bottom to the top. This would retrace to about 38.2%. Can exceed a little bit lower, but it cannot cross the wave 1 high. So you'd put your wave 1 right here and say that this wave 4 is not allowed to cross that wave 1. And you normally typically see this at 38.2% on the fib scale. Okay, so those are those two waves. Then of course wave 5 would essentially be 1.236 to 1.618 times your wave 4. And again, you don't have to move anything here. You can literally just draw this straight on. And basically, the deeper that wave 4 goes, the higher that wave 5 goes. Okay, so you can see that if this were to drop down deeper, then we'd have a wave 5 that would exceed higher. Okay. So, knowing the rules of Elliott wave theory, and specifically for these impulsive breakouts, it gets really complicated if you look at it from lots of other kind of structures and things like that. But in the case here, where we're talking about 5-wave impulsions, and specifically how I have witnessed a few other videos that have been pointed out to me, where people are drawing 5-wave impulsive breakouts on their charts, and are basically telling people that we're likely to see this big surge to the upside. It's important that we reflect on what the rules of Elliott wave theory are, so that we can actually accurately draw this on the chart. Okay, so knowing those rules, very, very important. Then, of course, there's the psychology that goes into all of this as well. Wave 1 is considered a bit of a fake pump. Wave 2 is the I told you so, it wasn't a bull market after all. Followed by wave 3, which is the, oh my God, we've really messed up. Me fucked up on not buying that wave 2 dip. Followed by retail then buying the wave 4 because they believe that they're still in a bull market. Wave 5 is then the end of the structure, and retail are left holding their bags as price retraces down afterwards. Now, all while this is going on, your institutions created the wave 1, then they sold off a little bit to bring in the wave 2. That wave 2 is in a reaccumulation phase, and institutional investors are pushing the price up into the wave 3. Institutional investors are selling the top of wave 3, retail buy the bottom of wave 4, and then everyone is left holding their bags at the top of wave 5. The psychology elements of course, what is going on with Elliott wave theory. Now, there's a lot of arrows on the chart there. I kind of go through this in the Elliott wave theory course that we created in a little bit more detail. I'm just going to keep it nice and brief for the purpose of this video. Perfect. That now gives us a bit of a foundation to work from when we start applying the Elliott wave theory to the charts. So, with this weekly time frame, there's lots of different ways that we could approach it, right? Let's first of all start with people who I've seen draw 1, 2, 3, 4, going to the moon. Some people have even gone, here's 3, and we're just finishing off wave 4 and we're going to the moon, right? And so this is probably a really common one because it makes it look like, yeah, it looks pretty impulsive, right? But the first thing we need to consider is, what is Elliott wave theory? Well, in this particular 5-wave pattern, it is supposed to be a 5, 3, 5, 3, 5. Right, and so straight off the bat we can see, well, there's not 5 waves internally on that wave 3, so we already know that it's not really doing this, but we can just really simply go and grab our Fibonacci retracement tool, throw the fibs on here, throw this up to the bottom of our wave 2, and we can see for a wave 3 to be valid, we'd have to have hit 3.79 or don't just call it $3.8 million Bitcoin, right? So we know that we're not in a 5-wave impulsive pattern, and that this particular structure as drawn here is not correct as per Elliott wave theory. And I think this also kind of feeds into that whole narrative that Elliott wave theory doesn't work. And it's mainly because there's a lot of bad analysts out there that are not applying the rules of Elliott wave theory to the charts. And so as a result, if you don't apply the rules, you're not going to get the results of Elliott wave theory. And Elliott wave theory is very, very accurate if you draw it correctly and if you pay attention to all of the sub-counting structures. It can obviously be wrong from time to time if there is a low liquidity within the market. Elliott wave theory requires a high liquid market. Bitcoin, in my opinion, is a highly liquid market. And if you get Elliott wave theory wrong on Bitcoin charts, then ultimately it's the analyst's fault. I've been at fault. I've drawn it wrong in the past, and I continue to struggle to implement Elliott wave theory, always consistently learning, right? It isn't an easy thing to do, but if you can get it right, it is a very beautiful predictive tool. Come back into here. So we already know that this particular structure for Elliott wave theory is wrong. It doesn't work, right? So we know that that is not a 5-wave movement. So then we start thinking, okay, well, where else can we possibly draw Elliott wave theory on here to try and get us into this kind of idea? Well, what if, we were to kind of think about maybe this area here being our wave 1? We just forget about everything in the past, right? I've seen some other people try this, basically assuming that we're still in this wave 3 and we're still going to the moon. It's how you kind of get to those multi-million-dollar Bitcoins, right? And well, if we draw this on, we'll move the fib chart over. Here you can see that we are going to be talking, I mean, this is really not accurate at all because I'm not even really paying terribly too much attention. It's actually a little bit higher, so right about there. This will be a $7.8 million Bitcoin before wave 3 gets hit. Okay, I mean, sure, you could argue that maybe that's a possibility, and I'll show you why that's a possibility in a moment. And we're still in the really early stages of it. This one here, you're not going to know about until we kind of really get into the nuts and bolts of the future of Bitcoin. But at some point, we would be looking at a very, very significant reduction in Bitcoin price for the wave 4 if this were to play out. Okay, again, we'd be looking for 5-wave internal movements. Now, this might be something that is so far out, taking us out towards 2030 before we actually see anything. It's probably not worth really focusing in on right now because we are a very long way out from it, right? So let's focus in on what is possible from that 5-wave movement, right? And we can see that we have this idea right in here of a 5-wave movement. This is something that happened in the previous bullish market. We have a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Okay, now there's a few things here that we have to kind of consider that's more in line with advanced Elliott wave theory, but I'm going to go through this because it is what we see right in front of us. Here we can see that our wave 1 went up. We had a wave 2 correction that was very deep. Okay, the wave 2 correction here coming in down deeper than the 88.2. Again, I'll draw the fib the other way around, like so. There we go. We can see that we came down to 88.2%, right? 50 to 88.2. It didn't come down deeper than 88.2, and this was the pandemic crash. Okay, so we had this really good start into a wave 1. We pulled back into the wave 2, which is exactly where you would expect it to. We have a wave 3 that rallies up higher than our 1.618, and then we have a wave 4 that comes down, and the wave 4, if I draw in the next fib chart here, comes down to 38.2. I think it's actually a little bit deeper than that. Let me just check. Just pull that across. Comes down to the 702, another key area for the Fibonacci retracement tools. I'm going to draw it the other way as well because I show that close to that 38.2, which I keep drawing it the wrong way around. We do it this way around here. Pull that across. You can see right here on the 702, 30%, not the 38.2, but again, it's in its range. And then, of course, we move up. Now, we did truncate. Now, the word truncate kind of trips a few people up, but essentially what that means is that we fell short. Okay, we didn't quite hit our target at this range here, okay, which was going to be $78,000 to $107,000 in that previous bullish market. Now, why am I talking about all this? It's really important. I'll get to it in a minute, promise. So as we can kind of see here, there's a 5-wave internal movement going on inside here, wave 1, wave 2, wave 3, wave 4, wave 5, and there's an extension in the 5th wave movement, right? We truncated, we fell short of finishing this structure, which meant we finished our 5-wave movement, right? And so if I zoom out of this for a second and I start removing all this stuff off the chart, there is a 5-wave impulsive break from December 2018 upwards towards November of 2021, right? So we do have that. And then we have a 5-wave correction. This is really important. We have a W, X, Y, X, and Z. Okay, so as I said earlier, right, wave 4s must require a 3-wave movement. I say they must. It's not a hard and fast rule that you only ever see 3-wave movements, but it's very rare that you would see a 5-wave movement in a wave 4 positioning. Like this. Don't get me wrong, you might see triangle patterns, which are technically A, B, C, D, E's, but you don't normally find W, X, Y, X, and Z's. It can happen, but it's rare. And so we do find this scenario here. And so I bring this up today because it is possible that this 5-wave pattern that I was tracking in 2021 is incorrect, right? And it allows us to look at this maybe as a bit of a wave 1 situation here, wave 2, all of this being wave 3, big wave 4, big wave 5, but truncated still. Allows us to then look at this with a wave 1 situation from December 2018 up into July 2019, down into our pandemic wave 2 low, wave 3 hitting this wave 5 high here, and this 5-wave WXY XZ is, of course, the wave 4, meaning that we have the 5th wave movement to come. Okay, and this is the one that is still technically possible, but I don't think is highly probable. Okay, and it's really important that we get this right, because in this particular case here, we measure the distance, we know we hit the 1.618, that's not a problem, but we do know that wave 4 is not allowed to cross the wave 1, and we got very, very close to this. Okay, so it still technically is a valid wave count here. Now, with this being done, we would look at this as a complete zigzag pattern over time, by the way, guys, which means we complete the 5th wave movement and we are dropping hard, and we'll be seeing Bitcoin prices that people just didn't believe would ever see again if this is the case. So this is not an ideal situation to find yourself in. You might find that Bitcoin has a nice rally to the upside soon, as in we see Bitcoin's price action really pushing up towards 170, well, more specifically 120 to 170. It's not the $1 million Bitcoins that people are talking about. And if we were to complete this pattern, it would actually complete a 3-wave pattern from over here, which would be A, B, and C, and then that would lead us basically to having a big, massive crash across Bitcoin, right? It will be absolutely catastrophic. So this, by no stretch of the imagination, is what we want to see. This is not an ideal pattern to kind of see playing out. Okay, but I do want to put a video out there to kind of say, like, some of the patterns that you see are wrong. Some of the patterns are technically correct, but are unlikely, which is the one that you see here. In my opinion, the most probable scenario is one that we already had drawn out, which is that we completed 5-wave movement to the upside over here. Okay, let me grab that and pull that back in. Okay, we've had the W, X, Y, X, and Z pattern to the downside. And then what we're going to do is we are going to have another 5-wave move to the upside, which mirrors the first 5 waves that we saw here, which will bring us more in line with a move upwards towards this area of 337 to 696. Okay, so basically close to $700,000 Bitcoin. That there would allow us then to have a zigzag pattern like this, A, B, and C. Okay, which will then allow us to have a zigzag pattern over here of A, B, and C. And this is really important because the whole entire thing would essentially just be a W, X, and Y. And that there would finish off everything from a Bitcoin structure point of view on these, since 2011 through to current. That there would actually allow us to see really good growth in Bitcoin after this is complete. Massive crash to the downside, and potentially fueled by Bitcoin spot ETFs and the way that institutional investors will potentially be playing the market. Of course, we could see something totally different after this all completes and we enter into a new age of Bitcoin where it is more like the stock market. I don't know how that's going to look, but what I do know is it's a very interesting time to be in crypto. It's a very interesting time to see how everything is going to unfold. We obviously have the more conservative case scenarios where you're hitting 120 to 170, and then we have more scenarios like this one where Bitcoin is moving up towards $330 to $700,000. So, whether we think Bitcoin's going to be really strong in the next bullish market or not, I think there's a lot of things to kind of be looking forward to. Now, most recently, I spoke about all the various different sell the news events. I think the Bitcoin spot ETFs are going to be something like that. So why not check this video out right here where I discuss all of that.